Hi fellow traders, I'm making this video to share my analysis of Kiwi dollar with you. So New Zealand dollar versus US dollar has been trending to the upside since last week of September, and it was a really nice uptrend. Then this was a downward retracement and a further continuation to the upside to at least 61.8% of the fall was expected, having seen this previous sharp trend to the upside. But now this is off the table. There were two hopes which were suggesting that market can go slightly up and can go 61.8% of this recent fall from this area to this 38.2% Fibonacci support level. So this Fibonacci 38.2 support level has been drawn as per the recent swing from this point to this point. So you can, if you have watched my videos of NZD USD since January 2nd, you have seen that I was in sell positions, initially targeted 30%, that was hit, then targeted 38.2%, that was also hit, and then market has reacted to the upside. And then then from here there was also a hope that right from this point market can touch 61.8% of the fall, but this didn't work and market has fallen again to the downside. But here again there was a reaction on Thursday, and this had made a bullish engulfing candle pattern. So either this was the starting point and this could have gone to the 61.8%, or at least this could have been at least similar to the previous upward retracement. At least this could have been the similar retracement to this area, but this didn't work, and market slightly fell down on Friday. But Friday had not erased Friday has not eliminated the chance of upward continuation. Later later we went through the weekend, and when market opened on Monday, market opened below this closing point of Friday, and perhaps this has been caused by risk aversion due to this coronavirus thing. China has recently said that coronavirus can spread further, and all risk currencies are weakening and safe haven currencies are strengthening because of risk aversion caused by this coronavirus thing. So market fell down, and that was the final chance, and now we cannot talk about any upward continuation. Rather, we have this breakout of the support 38.2 has been finally broken, so we are now on to opposite direction. We are now on to sell position, and we will be targeting something to the downside. And then the very first target will be this A B C D, AB equals CD pattern. That will give us a target of 64.93.6. So this is, and if you kind of look at this pattern, like this was the left shoulder, this was the head, this is the right shoulder, and this is some kind of head and shoulder pattern. Not exactly perfect because the distance between the shoulder and head are too big, but this is kind of head and shoulder, and market has broken to the downside already. So this 38.2 support was not only the neckline, not only just the Fibonacci support, but this was significant also because this was second attempt when market was going to the up. So it could have been a double bottom, and then market could have gone to 61.8% of the fall, which didn't take place. Even in the second attempt, market fell down. So now there is a clear bearish setup, and further this will be the nearest target. If we go to weekly time frame, we have different setup, and that is also looking like a inverted head and shoulder. Then this can be the left shoulder, this can be the head, and then market is now forming the right shoulder. And here we have to take the entire swing to the upside, and the 50% of this entire swing is coinciding with the low of the left shoulder. So the minimum target can be this 64.73 as per the weekly time frame. So let me see how much is the difference between 64.76, not 73. 64.76 is the 50% as well as the low of the left shoulder. So either 64.76 or maybe this ABCD 100, AB equals CD. So these two things are making a support cluster. So here we can see that the market will find support at this area next. Next will be this area. This will be the next support area, and something between 64.92 and 64.76 will be our next target. So that's all about the NZD USD. At the same time, if we look at the USD JPY, USD JPY is also going down, and this fall is not going to stop right here. If you have watched my previous analysis of USD JPY, I was expecting a little upward correction to at least 50% of the fall till here, till this 38.2 area, but that didn't happen, and Japanese yen kept strengthening on the risk aversion issue, the same issue which I talked about, the coronavirus. And market has opened today very low from the closing point of Friday, and didn't even fill the gap. I do not believe in ideology that market will always fill the gap. Sometimes it happens, but it can even happen after the market will fall down, then go up, and then close the gap. But that is not how we have to trade, and we have to wait for closing of the gap. Market can continue downside, and this move is going to be extended. If you look at the 1 hour time frame, market had fallen down after opening, tried to go up to fill the gap, but still gap was not filled by kind of like 3 pips. So it can be filled in some brokers, cannot be seen as filled in some other brokers, but then market again is falling down, and this is going to again retest maybe these lows. Previous fall had happened on global risk of a war between Iran and the US, and now this is the coronavirus, and Japanese yen is going to strengthen. This is not going to stop. This will be a deeper move to the downside, in my opinion. So we can sell NZD JPY, and we have already sold it. So we now are in the sell positions in NZD USD as well as in NZD JPY. Rather than taking any target on NZD JPY like AB equals CD, or maybe ABCD equals 61.1%, we will be looking at the major pair, that is NZD USD, and when we will close position in NZD USD, then we will close position in NZD JPY as well, irrespective of any target calculation on this NZD JPY pair. So that's all for New Zealand dollar right now. Thank you for watching.